Hello and welcome to another Smaulgld live stream. It is September 9th, 2019, and this is the second Smaulgld live stream of the day. Did one earlier on Killer Silver. Not going to tell you what that was about. You'll have to go and check that out yourself over on the smaulgld.com website or on BitChute or even on YouTube. You can check it out. Now, China calls for more infrastructure projects. Before we get started, just to let you know, we are competing with a live stream of a different nature. President Donald J. Trump is holding a rally in North Carolina, and it's a Keep America Great rally. So I do appreciate those of you who have foregone that wonderful opportunity to listen to your president and instead tune in to smaulgld.com. All right, so China calls for more infrastructure projects. And I don't only want to talk about the infrastructure binge that China's been on the last 10 years, but also to tie that into their debt situation, but also to tie that into the overall global debt situation and an indication, an indication that this, I don't know what that was, an indication that the debt situation can go on very long when you have sovereign entities issuing the debt. Now, what do I mean by that? Okay, so if you borrow money and you borrow money on a credit card and you don't have the ability to pay it back, and you say, well, I can't pay it back, but I sure could use some more stuff. So you go to the store and you buy more stuff, or you go online and you buy more stuff. Well, there does come a point, it's not hypothetical, it's not speculation, where if you can't pay it back, the credit card company will take your card away and you'll have to default on your credit, and then you're done. You can't spend anymore. You're not going to be able to spend your way out of your debt problem. Corporations, similar, however, they can get a lifeline, they can get a line of credit, they can put up collateral, they can do a equity offering. There's certain things companies can do that people can't do to forego and possibly work their way out of a debt crisis situation. There are a lot of companies that have what they call junk bond debt. They issue more junk bond debt, and then maybe the company turns profitable or cash flow positive. They can pay down their debt and everything can be fine. Governments, however, if they have the ability, because they're in charge, like in China, just to say, don't worry about that debt. We'll just print more. Now, it may have an impact on the economy. It may have an impact on their currency. But a strong economy, a strong country has proven over the last 50 years that they are much more immune and much more able to throw debt around. We heard the Fed talk, or we read the minutes, and we covered it on this channel, how they were talking about at their last meeting, how they were somewhat upset that they didn't print more money during the financial crisis, and that they learned a lot of lessons. Not that they printed too much money, that perhaps they didn't print enough, that they learned how to get drunk, and they learned how to drive while drunk, and they realized they could have flown the airplane drunk. Why not? So when we start talking about China, one of the things I've said for years now is that this BS about China to crush the dollar and gold back yuan, you've heard it all before if you're new to this channel. Well, you just heard it for the first time, but I've never believed these gold pumper stories that somehow China held the key to your gold riches, that China was the productive counterpart to the U.S. All the U.S. did was issue debt, and China was productive and sent stuff to the United States, and all the U.S. did was send them green pieces of paper, and this was unsustainable, and what was going to happen was the dollar was going to collapse, everyone was tired of the dollar, end of dollar hegemony, and China was going to, because China was buying gold hand over fist, they were going to be the big winner in all this. Now, what all that analysis failed to take into consideration is, yeah, China maybe makes a big deal out of buying gold, but they created more debt, double the debt of the United States and the ECB combined in the last 5 years. So China is no paragon of financial responsibility, no matter how many Sun Tzu quotes come out of the woodwork from the gold pumpers. So, however, what I did say and have been saying is that gold will rise, but not because of this gold back yuan or China to crush the dollar and the dollar's going to collapse, but rather because China itself is going to create a financial crisis, either from imploding their own currency or the overflow from the daisy chain effect of their own debt Ponzi scheme collapse. Now, I still believe that's possible. And I've said all along that this BS about them having a lot of gold is going to save them. It's not, and I'll quickly show you a chart about this before we get into their latest, how do we call it, grand idea to do different type of infrastructure. Back in 2017, 2 years ago, September, I pointed out that the gold pumpers love to say China's lying. There's some type of Sun Tzu deception about the amount of gold they have. No, it's not. It's obvious there's a lot of gold in China. It's obvious how much gold that they mine. It's obvious and transparent how much gold they import through Hong Kong. And clearly, the amount of gold they mine every year is well over 400 tons. And if you added up that gold since 2000, obviously there's 52, 53, 5,500 tons of gold. So when China comes out with 1,600 tons of gold on the People's Bank of China balance sheet, you're Sun Tzu, they're hiding it. They're somehow, no, they just don't have it at the People's Bank of China. If they've imported, and the world knows they've imported 5, 6, 7, 8,000 tons of gold through Hong Kong, they're not hiding anything. The People's Bank of China just doesn't have all the gold in the country, and not all the gold in the country belongs to the People's Bank of China. It may belong to the government. Indeed, actually, theoretically, or in communist lore, all the property of the citizens, they may allow them to hold it, belongs to the government. So, in any event, I even indulge the gold pumpers, and I did my own calculation on how much gold is in China, and I assumed it all belonged to China, and I came up with 20,000 tons back of the envelope by adding in People's Bank of China, the Hong Kong imports, the Chinese mining, and so on. But even that gold, the 20,000 tons, not the 15, 16, 1,700 tons on the People's Bank of China, at the time, at 1,300 an ounce, was only worth $800 billion. So this idea that somehow the $800 billion worth of gold was going to help them, well, it's not. Because at the time, 2 years ago, they had 28 trillion in debt. Now that number's doubled, so that number's like 60 trillion in debt right now. Even if China were to be either lucky in that somehow the gold price would rise and somehow not impact the yuan, not impact their economy, even if it were to go up to 10,000, well, then they'd have 10,000 an ounce, they'd have $6 trillion and 60 trillion in debt. Their gold is not going to save them. Gold's not going to save anybody. Gold is right now is a small portion of the world's financial assets. It doesn't cover anywhere near the amount of any country's debt, not even discussing the corporate debt. So gold is destined, I believe, to go higher because it is an asset that doesn't pay interest, but it doesn't have a negative interest rate. It can't default. You really can't make more of it. And I mean, you can mine more of it, but at a cost, and you can't really increase the gold supply, the existing gold supply by 10, 20, 30% a year, at least under current economic circumstances and technology. You can't do it. But the idea that somehow China was this golden enterprise that was going to crush the dollar failed to take into account how much debt China takes on and how they fund their economy. So quickly, before we get into this new infrastructure, and another one of the things that the gold pumpers you'd say is China is building infrastructure. They actually have something to show for their borrowing. I guess that was what they finally conceded, that they were borrowing money. But here's the thing about that infrastructure. In a non-government-controlled, government-directed economy, infrastructure or any economic activity takes place based on an entrepreneur saying to himself or herself, or a group of entrepreneurs, investors, if we build this, whatever it is it's going to be, whatever enterprise they're going to enter into, will we get a return on investment? And that is the entrepreneur's skill and insight and foresight as to whether they can make a project run, and it's based on market analysis. It's based on how well they think they can do the project. Now, if they turn out to be wrong and they build a bridge and no one needs to go on it and they try to charge a toll, well, it's not going to happen. Now, a lot of what happens in economies are governments decide, you know what, maybe enterprising people won't do certain things, so we can't leave it up to the market, so we're going to do it ourselves, like schools and roads. That's the whole idea that who would build the roads if the government didn't do it. Who would build the subway systems? Failing to remember that the London subway system, the New York subway system, were all trolley systems, were all privately funded back at the turn of the 20th century in the early 1900s. So it's kind of a false argument, but put that aside. That's how projects get built. And they're usually based on an economic demand or a market demand for something, or at least the entrepreneur thinks there's an economic demand for. Like earlier today, when we were talking about killer silver, I was suggesting, and I'm not willing to take this entrepreneurial risk, that there might be a market for silverware that is basically flatware, no design, and it's produced at a price that's just a few dollars over spot. And this way people, instead of stacking coins, at least they might decide that they could also not just have coins, silver in the form of coins, they can have it in the form of silverware, they can actually get some use out of it, and so on. That would be an entrepreneurial risk to put money into that, and then if it doesn't work out, who loses? Me, the person who tried to put money into selling small premium over spot silverware. Now, what China does is the complete opposite. Full faith and credit of the Chinese government says, well, we know that if we build a bridge or we build a highway or we build some tunnels, we're going to create a lot of jobs. And if people have a lot of jobs and they get paid for those jobs, then they're going to have money. And then they can go out and buy stuff and we can really stimulate the economy. Fine. And so China does that. So what they do is the People's Bank of China instructs the state-owned banks to lend money to state-owned enterprises to create certain infrastructure projects. And then they go out and they build them. And some of them work and some of them don't. Some of them work to the extent that they build a couple of skyscrapers. There's tenants for them. They fill them up. People move in. They pay the rent. The state-owned enterprise makes money from this endeavor, pays back the loan to the state-owned bank, and everybody's happy. Government looks at that and say, well, that's a big success. Let's build 10 more skyscrapers. State-owned bank lends the money. The state-owned enterprise builds the skyscrapers. They go up. They fill up halfway. But during that time period, the making of those 10 massive skyscrapers, more Chinese citizens are earning real money by working in construction or whatever other ancillary services they're providing to the project. They're then spending money. It's going around in the economy. But the state-owned enterprise is losing money on this every day. Half the buildings are are not filled up. They're not paying rent. And they can't pay the state-owned bank the money back. People's Bank of China says, well, so what? We can always use an extra 5 skyscrapers at some point. Let's just tell the state-owned banks not to worry so much about not getting paid by the state-owned enterprise. And so they then say, okay, well, at least just tell us you've got bad debt and you can't collect on it. Or if it's too extreme, why don't you just forgive the debt and then just turn it into equity? Or why don't you extend the terms of the debt from 20 years to 100 years, and this way maybe the state-owned enterprise can pay it back. Or better yet, why don't you loan them more money and maybe they can build 20 more skyscrapers? And you start saying, wait, they haven't filled the first 5 up. Yeah, but if you build 20 more, then we can bring in more people from the countryside, and they can get jobs, and we'll work our way out of this. We'll spend our way out. We'll borrow our way out and build even more skyscrapers. So they built 20 more skyscrapers. So from a 2 skyscraper project to a 5 skyscraper, now they're at 20, and they're not even half full on the first round. And the next 20, there's basically no demand for whatsoever. But they created GDP, they created jobs. They were doing very well with building the skyscrapers. Now, the apologists for this, who many of them are Austrian School of Economics, should realize this is lunacy. There's no demand for those apartments. The only reason the Chinese government built them wasn't to have them to move into. I don't think the projections show that they would need 20 extra skyscrapers, at least not in the next 2, 3, 5 years. And it wouldn't make sense to build them in advance of needing them. Why? Well, there's the opportunity cost of that money. Because when you build 20 skyscrapers that no one's going to move into it, don't even know when they might move into it, well, there's taxes to be paid on that. There's maintenance to be paid. Those aren't assets. If you think that having a skyscraper that no one uses is an asset, borrow money and put one in your backyard and take the risk on that and see how that works out for you. It's not. So that's how China decided. And they know this. This isn't my insight. This hasn't been hidden from the gold pumpers. They know that their economy has been overly reliant on construction, borrowing money, state-owned enterprises, then build these things, and they have really driven the economy that way. But it's not an asset to have a lot of debt and say, but at least we own stuff. When you own that much stuff, that stuff owns you, to use a cliche. You're not better off having all those skyscrapers. You're not better off saying, well, one day when we cross that bridge that we spent $3 billion on, it's going to pay off. No, it might not. And certainly it's not cash flow positive now, so you basically created a financial issue. Then they decided, well, maybe we'll do the Belt and Road and we'll export this type of economy. We actually did a blog post and a YouTube and a BitChute on this. I think it was called China extends or exports its road to nowhere economy overseas. Same thing. You go into a country, you tell them, hey, you don't have any infrastructure. The country says, we don't have any need for infrastructure. We're all a bunch of farmers here. They said, yeah, but you know what? If you built a railroad, you built a bridge here, you built a dam over there, you'd probably get pretty much up and running. And they said, how does that work? So we lend you the money and we bring our people in and we build it and then you pay us back. That's how do we pay you back? Well, from the money you're going to make from the project. And then they said, well, what if the project doesn't work? I said, well, then you owe us the port or you owe us, some part of your country. And that hasn't worked out very well for the countries that have been along the Belt and Road. And a lot of them, like Malaysia, have canceled those projects. So that puts China in a circumstance where they say, wait a minute. Okay, if they're not going to go for it overseas and they're not going to, we can't keep building skyscrapers because now it's pretty obvious that no one's living in those skyscrapers. So what is we going to do now? Well, the idea is it wasn't that we were building too much infrastructure. We weren't building the right kind of infrastructure. Now, a lot of the money that was borrowed went into bridges, it went into tunnels, it went into skyscrapers. It was very construction driven. Well, according to Yuan Talks, China will relax funding rules for more infrastructure projects. Now, so they need that like a hole in the head. They've got enough infrastructure to last them. They do have some very fine working infrastructure. They have great airports in a lot of places. And one of the Smaulgld subscribers, Albert Song, was saying, look, the United States can benefit from that. Well, sure, if you need infrastructure and private enterprise isn't building it and the government is willing to fund it, okay, that's fine. But if you're building infrastructure not because you need it, but because you think it's going to create jobs, well, it might create jobs, and you think that that's the function of government is just to build stuff to give people work, that's basically a ditch digging program, glorified. And that's actually worse because you pay people to dig a ditch and then to fill it back up. Okay, they had a job during the time you did that. But you're not left stuck with an 80-story skyscraper that no one's living in and that you have to pay maintenance on. And otherwise it's going to fall down unless you actually, keep it up. So what China is saying now, they're going to move the focus from these big national infrastructure programs to something to allow the local governments, which are all controlled by the central government, to use the proceeds of special bonds as capital for 10 types of projects versus the previous 4. Now, in the previous 4, I think there were parking lots they were going to build. So they figure now this is their formula. This is their playbook. Lend money. Remember, these are dollar-denominated loans, too, which is pretty dicey, but this is the whole dollar shortage theory, that they have to then come up with the dollars to pay back the loans. Now, they're going to build, I think, parking lots, highways, railways, electrical and gas projects. Now, the question is, do they need them? Well, you ask any municipality, do you need a new park? Maybe, maybe not. Maybe the taxpayers say, no, we don't want another park. It's going to cost us money. But if the Chinese government tells a locality, hey, we'll lend you money to build a park, they're like, okay, can we have a parking lot with that? And maybe we can have a gas center. And what else can we build? What else? And this is not going to end. I mean, there comes a point where they are doing this because the other portion of their economy, the export portion of the economy, is suffering. Now, what happens to the export portion of the economy that's suffering? They subsidize that too. They forgive if let's say that there's certain state-owned enterprises that are sending stuff to the U.S. and the demand is down, they can do one of two things. They can subsidize them so they can lower their prices, which appears to be happening so that the prices don't rise so much in the U.S. Or if they can't sell the stuff, they can pay, the government can buy it from them, or they can give it to the people. There's so many things the government can do. But here's the real point I want to make about all of this. Yes, I think that gold will rise not because of dollar collapse or in the dollar hegemony and gold back yuan and petro yuan and all the parades of China to crush the dollar, but because this indicates an entire debt Ponzi scheme. Now, it's possible because the people who run China, unlike the people who run the United States, are actually, in an objective fashion, much smarter. You can, look who runs for office, and then look who becomes congressman and so on. They're not necessarily the best and the brightest. They probably the best and the brightest at getting elected, but they're not necessarily. I don't want to name names, but you can think of some of your favorite politicians. Now, in China, in order to become part of this planning, this central planning, which is still hubris, no matter how smart they are, they still can't outsmart the market, and they can't figure out a way out of debt problems. But the people who run China actually, for this kind of know what you're doing, they have to be standardized test scores. They have to be the geniuses. So they don't get to run stuff in China just by being, I'm sure there's some cronyism, but it doesn't exist in the same way that it does in the United States and other places. But this is their MO. This is what they're going to do. They're going to start building more infrastructure. And then you hear here, People's Bank of China injects, this is totally separate from it, 120 billion yuan via open market operations. Now, the Fed does this too, so it's not like the U.S. doesn't do it. The idea is not to bash China. The idea is to point out, and I've been pointing this out for years, that the United States, yes, from 2009 to 2012 was the poster child for profligacy in Federal Reserve, profligacy in fiscal policy with multi-trillion, billion, and trillion-dollar deficit, accumulated deficits. But since then, the world has gone in an entirely different direction. At least the Fed has cut interest, has raised interest rates, has stopped QE. While China's, as you see right here, they're not giving up. They're continuing in their debt binge in an attempt to save their economy. ECB has gone negative. ECB is buying corporate bonds. ECB right now, their QE program is bigger than the U.S. has ever was. Japan is still doing it. Point being is that the United States is not really the worst of them all. Now, people are picking up on this. Someone mentioned Jason Barak, Wall Street for Main Street, the other day, and I'm very happy to see that he has reformed in a sense, that he no longer believes these gold pumper anti-China stories, gold to the moon stuff. In fact, Jason and I are working out the details. We're trying to get scheduled a show probably this week sometime. And now, let's move on from China. And the reason I mentioned Jason is I was listening to his show today, Wall Street from Main Street. Check that out. He does a live stream every day like I do. And he was talking about, it's interesting when people do live streams. What I like about live streams, someone prompts someone to say something. And so today he was prompted. People were saying that, gold price was going down. And Jason, well, hold on a minute. The gold price went from like 1,200 to 15 something. And you're saying it went down $50. And he said that this is unusual, this time of year. So I thought it's kind of right. It is unusual, but are we looking at the last 10 years, last 20 years, 30 years? So I went and found a chart here. I'm going to show you. I think he's more talking about the gold demand in India picks up. He called after Diwali, however you want to say it, picks up towards the end of the year, and that is true. And we covered that last night. We're going to take a look at that chart again, but we're going to put it in the context of gold seasonal demand. What this chart is showing you, and again, all charts on Smaulgld.com. What I've decided to do after I do a live stream, I used to wait for the BitChute. I'm not doing it anymore. I'm putting up the YouTube on the Smaulgld site. When the BitChute is available, I add that in there. This way, if you watch the show and you want to see a chart, I'll have the blog post ready without waiting for the BitChute to process. So you can go back and look at the charts without having to try to find them at some point in the stream. Okay, so this is from Nick Leary, Gold Charts to us. Generally, the average of when gold does well. Now, one thing is for a fact, whether it was this year, last year, the last 5, 10, 15, 20 years, gold goes up on average from January to March, no matter what. Look, it just people start off the year and they say, oh, I got to allocate some money to gold, and there it goes. Every one of those averages you can see to about mid-February, they'll all go up. It's almost a sure bet. And I've never thought of this before, but I think in January I'm going to buy GLD and sell it in February. Just for the trade. It looks like, and again, this isn't investment advice. This is just 45 years worth of data. You can see it goes up. Now, so do stocks. Stocks also go up in January. It's a January effect. But you can see the effect of gold. It goes up through February, March. Now, he was then saying that it's not common for gold to go up this time of year. And, well, it's kind of true. But you see in the 10-year average, it kind of isn't. You see the gold price in August going straight up the green line. Then you see kind of in the 5-year, it's kind of iffy. But really, in the 10, 20, and 30-year, gold starts to come out of the summer doldrums and goes higher till the rest of the year. But he is right. It's the middle of the year after, I guess it's the sell in May and go away. He is right that in the summertime, gold doesn't go up. Look at that. Look at the black line. The 45-year average is more telling. In fact, you even see a dip in July on average. And now what I'm going to show you is 2019 overlaid on that. Now here you can see, now that's strange. Look at that. Boom. When July, you see a little dip on the 45-year average. Look at this year. So there is a huge difference. This is outside the average in gold of 2019. But you do see, other than the last 5 years and the last 10 years, historically the last 20 and 45 years, you do rise towards the end of the year. In fact, the 20 and 40-year average actually show you rise in the beginning of the year, you kind of continue to rise somewhat during the spring, and then you fall a little bit in the summer, then you rise from basically August onward to the end of the year, and then you start all over again. All right, now let me just show you the Diwali concept on a 5-year Indian chart that I made here. Now, if you look at some of those 100-ton numbers, if you go all the way to the far left, you got October, September, at the end of 2014, big 100-ton, 147-ton, 110-ton month. If you go to October, December of 2015, you see 101, 111. If you go to October, December 2015, you see 86, 110. You have other months occasionally in the spring where you have some big months, but then look at the last couple of years, it wasn't true. It's not just Diwali. The other thing that impacts end-of-year Indian gold physical demand imports, as measured by imports, is the strength of the monsoon season. So if there is a good rainy season, and the Indian farmers, rural farmers, the unbanked farmers, the ones who buy gold and hand it down from generation to generation, they'll have some excess croppage that they can sell, get rupee for, and then immediately turn it into gold. And that'll drive gold demand as well. All right, well, that's what I have for you today. So the point about the Chinese infrastructure is they may have, I mean, everything is at some point, so everything will collapse, but we can't underestimate how long China can find places to continue to push the can down the road. Maybe the road's a dead end, or maybe, they borrow money and they build more road and they keep pushing the can down it. So I'm not counting on a single event to drive the gold price higher. I think the circumstances are already in place. I think this negative interest rate, this global debt-based system, not the collapse of the dollar, even China collapse, but just that this is what China has to do. There is a point where no matter how much borrowing and building you do, you cannot keep a growth rate higher. Why? Because the demand isn't there. You've brought the demand forward. That's the key to economic growth. Is you can bring demand forward, but you can't bury yourself in forward brought demand. So yeah, you can build all those skyscrapers and say you're going to move into them, but how many are you going to build? You'll never move into all of them. If you just keep building for the next 100 years, 200 years, 300 years, they'll be obsolete. There's no point in building stuff that you don't need for the next year, 10 years, 20 years. If the only reason you build it is you think it's going to generate GDP and jobs. Well, now what China's realized is, okay, basta. No more skyscrapers, no more bridges to nowhere. Let's make some parking lots, and let's find out if they need libraries in town, or they need to localize this. But then at some point, how much stuff can you build in a town? I mean, the town one day might have 40 million people in it. Well, there's only 20,000 in it now. Do we really need a parking lot that can hold 300,000 cars? No, but we can borrow money and they'll let us build one. So the town says, sure. And remember, all this communist stuff, the way it works is, if you meet your goals, you get paid. So they tell you need to do these infrastructure projects. And they're like, okay, boss. And we need a parking lot with 20,000 cars. They don't question it. They say, okay, where's the loan documents? Because if we get this built, you're going to create jobs. Doesn't matter if the thing fills up or not. Doesn't matter if it can pay for itself. This is how people have to look at this. This isn't this binary, China has infrastructure and the United States doesn't. Well, yeah. But they also have borrowed a lot of money to build infrastructure they don't need, and that has to be maintained, and that debt has to be paid back, and it's dollar denominated, and there's a lot more moving pieces to it other than China to crush the dollar. All right, well, that's it there, and I want to thank people for listening. I'm going to take the comments. This is the fundraising portion of the video. It's the part that you have to listen to. How you can support Smaulgld. We're moving up now. We're up to 24 patrons. That's a record for Smaulgld. Up to a whopping $99 a month, which is wonderful. We accept Bitcoin, we meaning the Royal Lewis. Litecoin, you can hold up your phone and make a donation that way. I promised the crypto fans I'll start covering a little bit more crypto. I did do a video the other day. It was a live stream, but there was nobody around at the time. I just jumped on about scaling issues with Litecoin, Lightning Network, Bitcoin, and so on. So check that out. But if you do enjoy these podcasts, you can donate via Bitcoin or Litecoin. Hold up your phone to the QR codes. Of those of you who don't know what that is, then I guess you can't do it. But if you have a Loaf wallet or a Bitcoin wallet, and you have the ability to send Bitcoin or Litecoin, it is wonderful when you do it. I love getting it because it comes, it's immediate. There's no middleman taking the money. Now, my Subscribestar, if you want to donate there, I really appreciate Subscribestar, new Subscribestar Mug Stacker members, because I have $110 in there from 3 generous patrons. They won't let me take the money out until there's $150, and I have 5 active Smaulgld Subscribestar members. Now you can see why Bitcoin and Litecoin, that's why Bitcoin and Litecoin are more attractive. There's no third party telling you or telling me when I can access my funds. You send it to me and I have it. Patreon, same thing. They take a cut. Now, there's an economic case for Patreon. You say, okay, they take the cut, but they actually allow the ability to plan because you know you have a certain amount of money coming in each month. So you're willing to pay them. Same with PayPal. They provide a service. You can make one-time donations on PayPal. You can even put a recurring donation on PayPal. Also, if you're buying gold and silver, this is important. Let's say you don't want to donate, but you are buying precious metals. If you do so through the Smaulgld links on SD Bullion, Money Metals Exchange, and Golden Eagle Coins, Smaulgld gets a commission through those affiliate links below the BitChute and below the YouTube and on the Smaulgld website. You could shop on the Smaulgld website. We also have coffee, storable food. People, I really appreciate when you remember to do that, because if you're going to do it anyway, you might as well do it through the Smaulgld links. Smaulgld does get a commission on that. I have to disclose that. And of course, you can buy your Smaulgld mugs and other. I know people like the Smaulgld dog bowls and the Smaulgld beer stein and the Smaulgld mugs. So check those out on Smaulgld.com. I ship personally the Smaulgld Super Classic mug. That's the red one with the red interior and the red handle. Or the Classic mug. You can pay cash for those, meaning PayPal. You can send me a check and I'll send one out to you. Or you can do a Bitcoin or Litecoin payment on that. Just let me know. Or some of my bestest friends send me items of value. That includes cash, checks, silver I received a couple of times to Smaulgld LLC, P.O. Box 714, Dover, New Hampshire 03820. All right, let's see what you guys are saying. I do appreciate the support. Okay, what do we got? We got Carl Joseph DeMarco. Now, Carl Joseph DeMarco was a resident in China for the longest time. Nomadic Giant is here. Okay. Crypto Shrugged author. That's what he is. Excellent book. Okay, what? China is not financially responsible, but gold. Stand for delivery. Yeah. Gold back you want. China. The other silly story is that China is working through an intermediary and it's going to collapse the COMEX. My favorite stupid story is JP Morgan buying silver eagles and Canadian maple leafs. What a bunch of nonsense. But if you repeat a story enough, not only does people think it becomes true, but then they think if something is speculative, they think the more they repeat it, the more likely it is to become true. Unbelievable. China's going to fill all those ghost cities with gold, says Carl Joseph DeMarco in classic sarcastic form. What else does he have to say? Stand for delivery. Yep. China can borrow for infrastructure because they'll just wait for the price of gold goes to 10,000 next month and then use gold to pay it back. Yeah, this is the kind of nonsense that passes for analysis on a lot of these channels. All right, what else do we have? Full credit and credit in the Chinese government. Did I hear that right? Says DW. Yep. Carl Joseph DeMarco. Smaulgld. My precious. Where did a two-horse town like Yingang get money to rival Beijing in anything? Think about that. Yep. All right. Why does a backwater town really need a large municipal square? Well, it creates jobs. Arian Gorman, yes, good find. China is a huge bluff. 1.4 billion people in China is incomprehensible with population, work, and prices stabilized by the Chinese Communist Party. There could be awakening to democracy in China in 24 months. Smaulgld, can you give us the link to Jason's show? No. I mean, that's pretty easy to find. So if you can't find the link to someone's show, Smaulgld can't provide that other than for a small fee. I'll become a mercenary. All right, Fiona's here. All right, who else do we have? Jack, gold was $300 in the year 2000 and rose to $1,900 in 2011 due to the Fed and public sphere collapsing currency. That's correct. The Fed is at it with QE. The public is just starting to realize nothing's changed. Yep. Well, you see, that whole narrative was true. It wasn't pumping to say that this was nuts in 2009, 2010. This was unprecedented. They totally ran up the housing bubble. They totally collapsed the financial system. And then they totally tried to print their way out of it. And that was the reason to buy gold and silver. There's no two ways about it. And it looked like they were going to collapse the entire financial system, and then the world was mad at the U.S., and they were going to de-dollarize. So much has changed since then. So much has changed. Not that the debt has gone away, or that the United States has become fiscally responsible on the congressional spending side with the unfunded liabilities and so on, with the annual deficits. But the Fed's monetary policy has clearly changed from printing money and buying bonds and monetizing debt to raising interest rates and letting some of its balance sheet roll off, while other countries are printing, are taking interest rates down. So it's an entirely different situation where the United States has actually improved compared to other countries which are degrading, and which includes China. The only thing I can see in China's favor is that we built a freeway here 15 years ago, and now we're on third widening program, would have been cheaper. Nomadic Giant, my friend Wade Shepard wrote Ghost Cities of China, One Belt, One World, worth following on Twitter. See, now there, if we want to know who Wade Shepard is, Nomadic Giant, then you can give us the link there. I mean, I won't be able to find Wade Shepard. You can email it to me as well. Would be a good guest. Well, so would you. We have to get you on the show. I haven't done many guests recently. I used to do a bit more of them. Now, Carl suggested, can you get Professor Balding? I have no idea who he is. On your show for an interview. He's Balding's World at Twitter. He's the best commentator on China. Really nails it. Okay. Well, that's a good suggestion. So, all right, everyone. Well, I think that's it. I want to thank you for joining tonight. Unless we got more questions. Do we got any more comments? I think people think I did the show already tonight because of the silver program I did earlier today. So check that out as well, and check out Smaulgld.com. Have a good night.